All right, you guys. Well, let's get cranked up. You guys know the first Tuesday of the month, of every month, we have creative financing with Miss Tamara Birch. And today, we're going to be talking about some no money down system payment programs, and I'm excited about it. But you know how we get started? Before we get started, before any webinar, workshop, boot camp, before we do anything, we always start the exact same way. And we start with the word of prayer. I see we still have people joining. So let me kind of tell you the background of the prayer that I do every time. Back when I was starting Platinum Real Estate, it was very, very tough. So I prayed. I prayed a lot. And I told God I would always pray. So before any event, before I do anything for this corporation, I always pray because I believe God has brought us where we're at, and I believe God will continue to take us where we want to go. So, without any further ado, let's start with a quick word of prayer. Dear Heavenly Father, we just come to you today with bowed heads and humble hearts. Father God, I thank you for all of your many blessings. I thank you for Platinum Real Estate. I thank you for all of the real estate agents that's under the sound of my voice. Father God, I thank you for all of the wonderful things you're allowing us to do. I just pray that Platinum Real Estate will always be the corporation that's doing things that's pleasing in your sight. This we ask in the precious name of Jesus Christ. Amen. All right, you guys. So let's get cranked up. So, what are we talking about today? Today, we have a very exciting subject, and I see we have some people still joining us. Um, Hold on one second. See, we still have people still joining us. Welcome, welcome, welcome. Welcome to everybody that is still joining us. What are we going to talk about today? Well, my good friend, Miss Tamara Birch, we was talking and I said, there's some great down payment assistance programs out there. There's some no money down programs out there. And I said, hey, let's jump into this. So I want to really jump into this. And you guys, please, ma'am, please, sir, please raise your hand, ask questions live. We love the live questions. Why? Because we want to answer all of the questions and make sure everybody get a lot of great information before you get off of here today. Before I introduce Miss Tamara Birch, let's make sure everybody have her information. Whether you're watching live or whether you're watching the recording, you can contact Tamara at tamarabirch.com. It's right there on the screen. Tamara, TamaraBurch, tamarabirch.com. That's her website. Phone number 770-916-1234. 770-916-1234. So if you are live, ask your questions now. We want to hear from you now. If you're watching the recording or you're watching this on YouTube or Facebook, listen, feel free to reach out to Tamara at 770-916-1234. So without any further ado, Miss Tamara Birch. Tamara?
Had to take a second there figuring out how to unmute.
Yeah.
Hey, how's everybody doing today? You know what? The sun finally came back out. That could
Yes,
be the
it did.
smile. There we go.
Yes. Yes, it did. And I love this type of weather because for me, I really love this type of year overall. Why? Because I love sports. So I got my basketball going on, I got my football going on, I got, the baseball just ended, but all of my great sports is there. It's not too hot. It's not really too cold yet for us, Atlanta folks. So it's just a great time of year. And I get excited because in a couple of weeks, I got Thanksgiving. Then in a couple of months, I have Christmas. Tamara, I just love it.
I know the holidays, they're here. It's so exciting. And I'm getting a lot of calls of people like, can I close in time so that, the holidays are this year at my house, my new home. And I'm like, yeah, of course we can. We can get that done. So, the holidays bring about, it's you can tell just by my voice, I just start smiling. For me, it's not about gifts or anything. It's about getting together with friends and family and really sitting down, breaking bread, and enjoying each other's time together. That's what I just absolutely love.
Absolutely. I love it as well. It's just a great time of year, isn't it?
It is. Well, and not only that, not only do we have wonderful weather, today's voting day. Hope
Yes.
everybody gets out there and votes today. I know I'm headed in that direction at 4 o'clock today. So happy voting day to everybody. This particular class, I'm just so excited over. It's one of my favorite. And I went back and looked, and we haven't talked about this in a year. I think it's been a year.
Yeah.
So sometimes it's good to reiterate changes as well as the program itself. And so Luther and I were talking the last couple of days, and this is by far one of my favorite things to teach and to have you gain knowledge in, because there's so many people that we could really genuinely help together, and they don't know. And I think if we all come together as a community, we could just help so many more people, so many more.
Absolutely. I agree.
Well, let's kind of get started. We're going to go to the very first screen. This is a new product. So if you're joining and you've caught this before, this is a new one. This is GRA's one, right? GRA is huge. Most of us know us as guaranteed rate versus maybe guaranteed rate affinity, or maybe just rate as we begin to transition. I think that has something to do with the baseball team, Luther, up there in Illinois. But this program is one of my favorites. It is a newer program that we got just in the last couple months, but really giving back to the community on what we could do, how we could help people. And I hope that you have lots of questions, because it's so funny. One of you, shout out to Richard Dukes, who may be on here, called and said, I know you're having that training at noon, but I have a question. And so, if you do have a question, definitely be posting it if you don't want to talk, or asking, because I guarantee you someone else will have it. So I may bring up Richard's question because it was such a good one when he called me today. But this particular program, what is it? What type of loan is it? How could we help our borrowers? And let me tell you, I'm getting some calls on this program with people who currently own a home that are selling their home. And the first time we're seeing this in a minute, Luther and I were talking about this, in a minute, we're seeing some people just not get the equity out of the home that they were getting when it was crazy accelerating, right? We saw huge swings for 4 or 5 years. But if you've been in your home for maybe a year or two, maybe you're not seeing those big swings, but you still need to move. It could be, hey, my one I had yesterday, my mom's moving in with me. We can't do stairs. We need a new house, right? Could be we're moving to Florida. I have a new job opportunity, right? There's all different kinds of reasons. Hey, new baby coming on. I did one where she got her daughter passed away. She got 3 kids. She needed a bigger house than a 2-bedroom house now that she had 3 teenagers moving in with her. So there's all different reasons people will move, and maybe they don't have enough equity in their home. They're selling it. They're gonna break even, maybe get a little bit, but they don't quite have enough for that down payment. This is the program for them. So let's really take a second here, slow this down. What kind of program is this? This is an FHA program. We mirror this with FHA. We mirror the down payment assistance with this, and it is just Beautiful, beautiful. Luther and I were talking about how fantastic and how many people this can help. And so sometimes you'd be talking to somebody, and I've had agents say, you can't get down payment assistance because you've owned a home in the last 3 years, or you've owned a home, period. So keep in mind, we have several programs. You just have to be one day. I have a lady closing next week. She is selling her home on Friday, closing on her new home on Monday. So, yes, you can use down payment assistance that quickly, that quickly. Okay. And so, this FHA program is for anybody. Here's the good pieces. Here they come. And then we'll get some questions going, but we're going to cover eligible criteria, who can receive it, program purpose, etc. But the big two questions I always get is, could I have owned another home? So, we've answered that one. Yes, yes, you could have owned another home in the last 3 years, just not one day. Amazing, right? The next question I always get is, well, Tamara, is there an income limit? I know this program is only 50,000. This program's only 100,000. My person might make 200,000. There's no judging on why you don't have down payment assistance, not when milk costs $5, okay? And meat costs what, $15 a pound or whatever it is, right? Crazy. And you've got 4 or 5 kids. Come on now. That gets spent very quickly. Okay. So there is no income limits on this program. That is amazing. So somebody who might have missed out by just $1 is not going to miss out. So these are the two big pieces here, that you can have owned another home in the last 3 years. You could make more money than most of the down payment assistance programs will permit and still be eligible for FHA. Now, what we do have to pay attention to, okay, the big piece here is FHA. This is FHA, right? So that means it must not exceed for your area. You want to always be paying attention to what is the FHA limit for your county in whatever state you may be in, right? Most of Atlanta, 688. Most of Florida, 688 and some change. And that is, we're expecting a little bit of an increase next year. As you know, it moves up constantly. And so just kind of keep in mind, if you're coming to me for this program for 800,000, obviously we're over that limit. Okay. So it's going to be the true FHA. Well, how does this help you? How can this help you? Well, as we all know, FHA is 3.5% down, right? That's their minimum. That doesn't mean you can't do more. As most of you know, we go down to 500 credit scores with FHA, not with this program, not with this program. Let me repeat that, not with this program. We need to see at least a 620. But FHA wants that 3.5% down, right? That's their minimum, unless you've got much lower scores, then they're asking for 10%. But 3.5% down. So what we do is we mirror it with a second loan. And let me tell you, your borrowers are comfortable with this. Your borrowers want this. They want the home. They are okay. What we do is we pay attention to the payment. Okay. We pay attention to what that payment's going to look like for them, where they want that payment to be. Okay. And we make sure with the first at 96.5%. Okay, so $100,000 purchase, loan amount 96,500, right? We then mirror it with a second lien of either 3.5% or 5%. Now, why would we do 5%? Why would we give somebody 5% instead of 3.5%? We give them 5% under two scenarios. And I do want to cover this, and then we're going to take some questions. Okay. We give them 5%, and this is so important to your people. We give them 5% to either help with closing costs, right? 3.5 subtracted from 5 gives them 1.5% to help towards closing costs. Or maybe the debt ratio's in play, and we want to give them 5%, have a bigger down payment up front, or for whatever the reason may be, the 5% is meeting their needs for a lower first mortgage instead of a higher one. Okay, so these are a couple ways we'll look at this loan program for them, and it'll swing either way. Now, we're definitely analyzing their loan to determine which one's right for them. If we can do just the 3.5%, because the seller's contributing so much, then we'll just do the 3.5%. Why add the extra 1.5 if we don't need it? We're not going to if we don't need it, right? Because we need the 3.5% for down payment. I have sellers all day long, which we will cover in more greater detail. I have sellers all day long paying all of the closing costs, all of it, right? And so the borrower is getting in with practically nothing. Practically nothing. Okay. So what I want to do is just stop here for a second, make sure Luther and all of you understood that portion. Then we're going to go on how to really make this benefit your borrower. We're going to talk about closing costs, etc. But I want to stop here for just 1 second to make sure we've all got it.
Questions, questions. Raise hands with questions. What type of questions do you guys have? Any questions out there at all? Questions, questions. Um, I have and you can raise your hand, ask your question live, or you can put your question in the chat, either one. I have a question here. So, Tamara, we was talking FHA, and you know there's always a big question on credit. So FHA can go down to 500, but did I hear you correctly? This particular program is 620. Is that correct?
That is correct. So FHA, why you here? And that's a great question because I know we've covered it, but I may not have covered it with all your people. When you hear, and please be cognizant of this if you are an agent or a customer, if you hear they can't approve you because you have a 610 credit score, that's not FHA. That's what we call an overlay. That means that lender has a condition that they're not going, a guideline that they're not going to allow anybody to close under X. Maybe it's 640, maybe it's 620, whatever their number may be. I spoke to one company, they're 680, which is crazy for FHA. So yes, we will go down to the 500. But this particular DPA program, okay, it is 620 to make this happen. But if you've got, I just approved somebody 599. They did 3.5% down. So, but they have the down payment. They've got the money. Okay, either a gift, which happened to be Mama Bear, they got a gift, or they had the money themselves, right, in order to approve them. So, but this program, we're looking at the 620. That is a great question. Great question.
Very, 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 very good. And that's important. And I did not know, Tamara, this is something that's new to me. I did not know you were saying that some companies can say FHA minimum score 680, 640.
Yeah, so they may have, right, they have what's called an overlay. It is to protect them on their book of business, right? How they're millions and dollars in loans, and they may say, well, we're just not comfortable going below a number, whatever that may be, including debt ratios. Maybe they don't follow the debt ratios for FHA. Maybe they have, this is how high of a debt ratio they will go. And they are able to do that because they do it across the board, meaning every single customer must have a minimum of this and must have a maximum of this debt ratio. Okay. And so when they put those in place, it's for every single loan that they do. So they're permitted to do it. But that does not mean that is what the guidelines are.
Tamara, this is really important because I'm just talking now from real estate broker standpoint. That's why I like partnering with you because let's say I'm with the lender and let's just go with that 680 number. And that lender says their minimum is 680. Do you know how much business as a real estate agent I'm gonna miss? Tamara,
It would be
that's
incredible.
huge.
It'd be incredible.
That's
And most, like you said, Luther,
I
most
mean,
agents don't know that there's an overlay. They
they
just hear
don't
denied.
know. And they
Yeah,
just say
they hear
denied.
denied and it's not denial.
Yes.
I appreciate all of you who call me because I do get calls literally a couple times a week. Tamara, can you save this one? Can you take a look at this one? And a lot of times I'm approving them. Sometimes I'm
Yeah,
not, but then I'm explaining why I'm not, right? You've got the actual reason versus the what I get a lot of calls. Hey, we're not getting any calls back, which is the one I got yesterday. No, this person's not even calling us back to say why we can't do it. Well, I hate hearing that. Nothing worse than a slow no. That borrower deserves us to tell them we can do it or not do it and why we can't do it, right? I mean, how can you fix a situation if you don't know how to fix a situation? And a lot of times, us explaining this is what you need to do, then borrowers are able to buy their new homes, to buy their forever homes, or whatever the case may be in the very near future. And the one I did today, all she had to do was pay $671 on her credit card, and we will have a high enough score, and she could buy a home in December. I
wow.
mean, so we don't want to ignore these people. We want to help them get where they need to be.
Yeah, no, I agree. No, I agree, and that's a huge point, right? Right there, Tamara, because you know, as a real estate agent, we could keep getting denials, not approved, not approved, and we're out, prospecting, we are advertising, we are marketing, right? Just to find out these people aren't approved, and the problem is there's an overlay of 680, and that's the
It,
problem. So that's a
it could be,
that's a
yeah.
huge point. Yeah, yeah, yeah,
Or it's a minor item, and a lot of times we'll go, okay, put them on your calendar for January, or put them on your calendar for December 15th, or whatever the date may be.
right.
And then hey, I can add this to my prospecting because this borrower is going to be potentially ready in a month, 2 months, 3 months, versus never calling them back because you have no idea why they're denied.
Absolutely. Yes, 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 yes. Another question for you, Tamara, because I want to look at all of this. We covered credit, great, and we know that's a big part. Debt to income, right?
Yes.
Talk to us now. First, because we have a lot of agents on the line. Explain the debt to income so we understand exactly what it is. Then explain to us the different ratios between FHA, this program, etc.
Well, and that's such a great question. And if someone asked it, thank you, because I think that's really important. And I actually get this call a lot, believe it or not, where somebody will go, Tamara, I don't understand. My debt ratio should be lower. And I'll go, but you have an HOA, right? If you have an HOA, that goes in your debt ratio. Let me explain this. We call it a front ratio, a back ratio. What is a front ratio? What does that mean? A front ratio means the house, meaning principal, interest, taxes, insurance, HOA, right? All of that. What is that monthly payment? Yes, the HOA is not in my payment, but it is in the debt ratio of the house itself. What does that mean for the house itself? Taxes, insurance, HOA, principal, interest. That's your front ratio. Your back ratio is the house, all of those things I mentioned, and that payment, okay, plus any bills that we're going to see on credit or alimony, child support, taxes you owe the IRS, bankruptcy money you might be paying, whatever those are, your monthly obligations. Does it include a cell phone bill? No. Does it include an electric bill? No. It is going to include those items on credit, and I'm going to touch one item here, items on credit, plus any money you may be paying the IRS. Maybe you're paying alimony. Maybe you're paying child support. Maybe you're paying a bill on your pay stub that you owe your company back money for whatever reason. Maybe you borrowed money from them. We're going to find it, right? Those all go into your debt ratio. The number one question I get is, Tamara, I have student loans, right? I looked at one yesterday. They owed $190,000. Okay, that's deferred. I don't need to count it. It's deferred. I'm not counting it. That is not accurate. That is not accurate. If you have student loans, they get counted in your debt ratio as a potential of what it could be in the future. So we will do a calculation on those, and those go into your debt ratio as well. So just kind of keep that in mind. So the debt ratio on this loan is great. It follows standard FHA guidelines. Typically, we see front ratios 46, 47%. We then would see back ratios 56, 57%. If it approves in our system, we're moving forward with the loan, right? We're going to move it forward and we're going to be closing it. The debt ratio on this is more lenient. Sometimes you might find people who have overlays at 45%. We do not have those overlays. If it approves, we're moving the loan forward. Okay. And there's reasons for maybe somebody having that. And a prime example, which is why I brought it up, is student loans. Maybe they're all deferred and they have no payments, yet I'm having to use a calculation. So although I might be looking at a 56% debt ratio or a 57% debt ratio, they don't really have that debt ratio because they're not really making those payments on the student loan. So it's long conversations. You need somebody who's talking to your people about more than just the mortgage, talking to them about finances. Are you comfortable with this payment? This isn't a one off where you're trying to get just this one client, right? This is about you building and helping them build their future, their generational wealth, and then continuing to see that you truly care about them and that you're trying to help their family and grow their family with this income in the future. So we want to look at their overall wellness as well. Hey, are you comfortable with 2,000? Are you comfortable with 2,100 a month? Do you need $1,500 a month? And having those deep conversations. Would you still be able to save for retirement if we did $1,600 a month? Are you putting money away in your 401k, right? Are these things normal mortgage people probably do? Probably not. But I think it's super important. We need to care about our clients. I hope, did that answer your question, Luther?
Yes, 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 absolutely. And
What
and
great question. That was a great one.
okay, if you guys have a question, send it to me in the chat or raise your hand. Feel free to raise your hand, ask it live, or you can send it to me in the chat. Um, here's a uh, yes, the chat is open. So please, ma'am, please, sir, if you have a question, please send it to us. Now, question here, Tamara. We was talking about, or you was talking about debt to income ratio, right? Front end, back end. I get it, understand that. You talked about student loans, got that. Here's a question for you. I'm getting ready to buy a house, and I understand my debt to income ratio. Let's say I have a full-time job, but I'm selling real estate as well. And I get commission checks from my real estate. So I'm making X amount on my full-time job, 100 grand. But I have these real estate commission checks coming in, or I have commission coming in. We'll say real estate, a state commission, but let's just say bonuses and commissions in general. When we talk about debt to income ratio, right? How is bonuses, commissions, or I'm a woman and I'm receiving alimony from an ex-husband. Can that be looked at as part of my income? I am working and I am working at a restaurant and I get a salary, but I also get tips. Those bonuses, can that be counted as income to increase my income to help my debt ratio? I know that's a big question, but Tamara, you got it.
It's a huge question, but it is a great question. I guarantee you someone's on here thinking the same thing because I get this call all the time from your people. I did have a little cough there. I get this call all the time from your people. And so FHA has definite guidelines for that, right? If you have two jobs, and a lot of times we get that right now, especially maybe you're doing Uber, maybe you're a real estate agent, maybe you've got the full-time job, maybe you're babysitting, whatever the case may be. I'm getting quite a few people with two jobs. So FHA says yes. absolutely, you can count two incomes for the same person who has two jobs as long as they have had two jobs simultaneously for 2 years. Let me explain this. That does not mean they've kept the same two jobs. They could have left one job to get a raise and go somewhere else, but they have kept two jobs at the same time. Okay. So they're not looking for big gaps in there. Any big gaps in that time frame starts over. Okay. So two jobs is acceptable. Can you use commission income? Can you use bonus income? FHA steps up and says, yes, you can. We will average that over 2 years. So if you've only been receiving bonus income for 2 months, you cannot use it. If you've been receiving bonus income consistently, that's what we're looking for, consistency. So 2 years, yes, we're going to use it. Now, you brought up a good point, and I get this call all the time from real estate agents. Can I use my commission, right? Not to buy the home, but I have commission. I want to use that as income, right? I have income coming in from being a real estate agent for the last 5 years. Can I use it? The answer is yes, but the difference is we're looking at those tax returns, okay? And we're looking at your Schedule C on that tax return for your net income. We want to see all those write-offs. So if you made $15,000, but you wrote off $20,000, you have no income for being a real estate agent. You lost $5,000. But if you made 20,000 and you wrote off 10, you might have 10,000. Now, it is more complicated than that, but that makes it sound a little easier for you to follow. We actually look at the tax returns and do the whole compilation. But if you are writing everything off, we do, right? We write off that car, we write off that stapler we just bought, whatever the case may be. You needed specific boots because you're going to go look at a foreclosure, you wrote that off, whatever the case may be. If that's the case, then you may not have any income to use. But can you use multiple income sources? Yes. That is absolutely acceptable. And it's also for this program. Yes, I'm going to say it. You can have a cosigner. Yes, you can have a cosigner. So that is very big as well. I'm seeing cosigners also, not only parents co-signing for their children, but we have begun to see children co-signing for their parents who are now retired. So we are seeing that flip a little bit. So wanted to kind of bring that up for you. Did that answer the question?
Oh, absolutely. Absolutely. Great, great answer. And I just want to piggyback. I have other training to help the self-employed real estate agent. But yes, is if you are looking to buy, and this is just a quick tip, have nothing really to do with the down payment, 100%. But agents, listen, two quick tips that I want to make that I hope you take away from today. Um, you do not want to become the mortgage expert. You do not want, and I always say this, don't start quoting interest rates and all of that. Don't get real deep into FHA and what qualify and don't qualify. What you do want to do, Mr. Real Estate Agent, Miss Real Estate Agent, you do want to say, listen, I have no down payment assistance opportunities out there. Contact me right now. You should be on social media, email marketing, text messaging, everything saying, I have down payment assistance programs. You could own your own house with no money down. Contact me today. The goal is it's a numbers game. You want as many buyers to contact you as possible. Some's going to qualify, some won't. We can never advertise and say, hey, contact me only if you have an 800 credit score. Can't do that, right? But we want to just simply say social media, LinkedIn, Facebook, Instagram. Contact me. You can purchase your own home before 2026. You can purchase your own home before the end of the year with no money down, with down payment assistance. I have the magic wand. Contact me today. Now, when they contact you, you immediately want to send them to Tamara Birch. We do not have the expertise to approve or deny. We cannot talk about anything. All we can say is, hey, yes, I advertised this and it is true. Let me get you to the professional that can give you all of the details. I'm just saying, contact me for some great new programs, right? Am I going to get into the to the details and say, FHA and GRA? No, I'm just going to say, here's what I have. Contact me. Then when they contact you, you send them to Tamara. Then Tamara will get them in the best program that's best for them. Okay. Now I have a question here, and this question I could ask it, but I think I'm going to ask Moselle to ask this personally to make sure I don't mess up her question. Some of them I can just ask. This one, Moselle, are you free? Miss Moselle Hurley, can you ask this live for me? Let me see if Moselle's still with us here. Um,
I'm trying to unmute. Okay, I'm
There you
there.
go, unmute. Yeah, Moselle, I was going to try to jump into this question for you, but I said, no,
Hmm.
no, 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 no. I want Moselle to kind of ask this personally herself. So, Moselle,
Hmm.
Tamara, what's your question?
What I was asking, I heard Kurt kept saying in our conversation, says this, the loans are deferred, for student loans are deferred, and I didn't quite understand that. What does that mean, and how are they applied to the loan or indexed into the loan later, as far as your payment would go?
A great question. I love that question. And again, thank you for asking it. So, student loans, a lot of times people have them deferred, meaning they're not making payments. Maybe they're still in school, maybe they had a medical reason, whatever the case may be. They went to the student loan people and they had it deferred. Please make sure that you're really deferred. We're seeing a lot of lates on student loans because people don't know they've reactivated them. So please, 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 please make sure that you have contacted the student loan people. But so let's say that you have 100,000 in student loans. Why am I using such a large number? Because we really do see that on a daily basis. If you have 100,000 and that's deferred, that means there's no payments listed for me. I see no payments. And so that still affects the debt ratio because I have to use a 0.5% when doing that calculation. So if you owe 100,000, I'm going to use $500 a month as your payment. Even though you're not making the payment, FHA says at some point you're going to have to start paying this. This probably more than likely will be your payment. We want to know that you're still going to be able to afford this home and not go into foreclosure now that you have to make $500 a month on a student loan.
Hmm.
So we will use a 0.5% of whatever those student loans are in the calculation for the debt ratio not to exceed that 56 or 57%. Did that answer your question?
It does. I
I
understand.
know we don't like the answer.
I,
We don't like it, but it is what it is.
yeah,
Yes.
I was
Thank you for the
confused.
question.
I got it.
Oh, 100%. If you were, I guarantee you I confused somebody else. So thank you for asking. Anybody has questions, please ask because they're great questions.
Now, Tamara, another question, but that just popped up here. You talked about gifts, and you said Mama Bear gave one of your clients a gift. So, okay, help us with gifts. Who can gifts? Do they have to qualify for this gift? Do they have to have income? Do they have to prove this gift? Can I pull this gift just out of anywhere? Does this gift have to come out of a savings account, checking account? Can it be drug money? I'm kidding, to Tamara,
Ah, you got me laughing on that one, though. I love
but
it.
you, but you're with me here. Let's talk about, you said, okay, Mama Bear gave a gift. I remember the first property that I purchased. Um, my father gave me a gift. Explain to us gifts and how this whole gift thing works. Can mama, anybody, is it just mom and daddy? Is it anybody can give the gift? Do we have to prove where this money's coming from? Can we just pull it from underneath our mattress and it never was in the bank? Help us with this gifting thing.
That is such a phenomenal question, you guys. And the reason it's so phenomenal is the guidelines have just changed this year. So it's super fantastic. Now, let's hope my 5 children are not listening to this because Mama Bear is close. No, I'm kidding. I don't want them to be calling me. Again, no, I'm kidding. So can you use drug money? No, we can't use drug money. So gifts can come from a family member, mother, father, brother, sister, aunt, uncle, stepmother, stepfather, stepsister, stepbrother, etc. Something of that nature. Cousin, nope. Right. Okay. So we're looking for family. How that's done is once you're under contract, let's call it Mama Bear again. Once you're under contract, Mama Bear is going to sign a gift letter. Okay. That gift letter is going to be specific to that property. It's going to have that address on it. It's going to have the amount that they're doing. It's going to have the account number it's coming from, etc. There is a specific form that is used. They then sign that, and then we use those funds in the calculation for how much money they're going to need to close and to get them approved. Mama Bear will wire the money directly to the attorney or title company. If you're on the call and you have a title state, then they're going to wire the money directly there. Because they are wiring the money directly there, we no longer take a copy of their bank statement. Their bank statement is not collected anymore. There was a lot of people giving gifts that did not want to give their bank statements over to the mortgage company. So FHA has changed their guidelines as long as what they put on there as their account number and that they are the holder and owner of that account. When the money gets sent, the money's validated that it is received from that account, from that person, and then that money can be used. Could it be 100% of what we are needing to close? Absolutely. So maybe they got 3.5% from the down payment assistance, or they got 5% from the down payment assistance. Seller paid 10 or 12,000 in closing costs, but they didn't pay all of it. Maybe there's 3 or 4,000 left over. Mama Bear wants to give the 3 or 4,000. The Mama Bear can, in which case, then you've got a buyer at the closing table without any money from themselves. All of it came from the down payment assistance, the seller, and Mama Bear giving the money, right? So down payment assistance doesn't mean you can't have gift money. Gift money can absolutely be used, and in a lot of cases with this type of loan, we definitely see gift money coming out of the woodwork, right? And so we just make sure that it's done correctly. We just make sure that they understand these are the steps that this individual will have to take.
Okay, so, and I want to be clear now. So I got that, right? So I want to be clear that when you say gift, mama and daddy or cousin or uncle or auntie or whoever can't say pay me back later. Gift means this person, I am giving this money and this person never have to pay me back at no time and for no reason.
It says it right on the letter. They
Okay.
do not have to pay this back. It is a gift to get them into this home. So that's very important. This person's going to sign this letter, and it says it right on there. Yes.
And so it can't be extended family. That's what I'm hearing. It cannot be extended. So it can't be, well, baby mama, baby daddy. It can't be like,
Three cousin twice removed is out.
yeah, yeah. It can't be. So it can't be I'm engaged or I'm, gonna get married or fiance or none of that. We're
Well, what
not
we
doing none of
find
that.
sometimes with the fiancés, believe it or not, they have shared accounts, but they're not on the loan. one reason or another, got the bad credit, got the job that's not going to be helpful, has the 250,000 in student loans. We analyze every situation to make the loan work the best way it can for the individuals, and sometimes that person's not on it. As long as they're both on the bank account, that's not a gift. If they're both on that bank account together, we do not consider that a gift. But gift funds are integral to this. So you have somebody closing with no money. Now, Luther, I know you want to bring this up because we talk about this. That does not mean I'm telling this person that's going shopping with you that they don't need any money. They need money. What are the three things they need right out of the gate? Right? Right out of the gate. And this conversation I am having with them, be careful. A lot of other people don't have this conversation with them. And this is super, super, super important. Okay. Number one, they need earnest money, right? That's probably 1%, 2%. I just closed one with only $500 on it. Go agent there. They need earnest money. They need inspection money if they want that property inspected. We all know they want it inspected. They're going to have to pay for that. And they're going to need their appraisal money, right? So, right out of the gate, they need money. Now, I get this call all the time. Can the person who's giving the gift pay those three things? Absolutely. They can pay all three of them. Okay. But if that borrower doesn't have that money, you better believe we're having the conversation of where is it coming from? Because you don't want to get in your car and then they can't pay for these things. They can't give the earnest money. They can't pay for an inspection. They can't pay for an appraisal. Where is these funds coming from? Because you have $97 in your bank account. Where are we finding this money from? Okay. So that is a conversation we definitely have right up front. Luther?
Yes, let me make this point. Let me be clear. Let me be clear. Let me give one legal comment. Okay. Yes, you guys. If a person is going to pay earnest money, right, that needs to come from a specific account. And I have had situations where Tamara have said, "Hey, what account is this earnest money coming from?" Right, right, Tamara.
That's right. We want
Okay,
to know before you get in the car.
okay. But let me be very clear. Earnest money is not required. You can do a deal with zero earnest money. So I want to be clear. Yes, typically in real estate, and yes, the majority of the time, the contract says earnest money. Earnest money is negotiable, right? Because I know somebody's going to say, do you have to have earnest money in a real estate transaction? The answer is no. I have closed deals with zero earnest money. It's not legally required. Now, if you're going to have earnest money, which is negotiable, just like Tamara said, 500,000, 2,000, 5,000, it's negotiable. Okay. If you're going to put down earnest money, we need to track where that earnest money is coming from. Number two, let's be very clear, inspection. An inspection is not required. I have closed a lot of deals. If your buyer says he does not want one, he just don't want one for whatever reason, he is not required by Georgia law to have a inspection. Now, if he's going to be, if he's going to have a inspection, absolutely. Tamara's right. How much is that inspection going to cost you? Different size properties, the larger the property, the longer it's going to take the inspector to inspect. Typically, the more expensive that inspection is going to be. So a very small starter home for 100,000 with 1,000 square foot, that inspection typically is less expensive than the mansion with 20,000 square feet. So yes, when this person is going to buy, if that person wants a inspection, we need to calculate like this in. Here's the point that I want to make so we are clear. Is it mandatory that your buyer have to have an inspection? Absolutely not. I have had buyers who say, I don't want it, I can't afford it, and it's not important to me. I'm not going to do it. Fine, that's that buyer's decision. Now, personally, when I buy property, I have an inspection, but that's me. I have had buyers say, I'm not going to do it. And they'll have to. Now, let's talk appraisal. Let's talk appraisal. If a buyer is paying cash money, you have to have an appraisal. It's up to him. It's his money. He's paying cash. He do whatever he wants to do with his cash, right? Because he's paying cash for this property. Now, if you're going to Tamara and your buyer's saying, Tamara, give me a loan. Tamara, I need your money to buy this property. Tamara, is the appraisal mandatory now?
Absolutely.
Yeah. Now, are y'all following me here? Right? Because I don't want everybody to say, leave my webinar and say, hey, this person have to have money for. No. Legally, Georgia law, no. Now, the majority of the time, there's going to be an inspection. The majority of the time, oh, well, no. Let me say it like this. There's going to be, the majority of the time, there's going to be an inspection, and we need to calculate that. If you're getting financing, yes, there's going to be a appraisal because Tamara's going to say, not Tamara, all lenders are going to say, if you want my money, I have to do a appraisal to make sure that this property appraises for the money that I'm giving you. That's why it is contingent upon the appraisal. Okay. If a person's paying cash, you can do what you want to do. Okay. All right. Let's close this out because I like to respect everybody's time. Miss Tamara Birch, please tell us 3 important things we should have learned from this webinar today. What is 3 important things we should take away from this webinar today?
First of all, thank you everybody so much for your time. This is actually a 2-parter. So we do have other pieces that were not covered today, and we knew that because there'd be so many questions on it. Number one, I think the biggest thing is that, you can use this program for the full down payment. People thinking they need 20% is not accurate. They can get into a home with as little as zero. So I think that's super important. You don't have to be perfect credit, right? We're not looking for perfect, not 780. That 620 is probably going to make you eligible for the program and for us to take a look at it. And I think the last piece is, that we are all here to help our clients, my borrowers, your clients. We are here to help them realize their dream of owning a home and building their generational wealth, whether that's today when they apply or 6 months from now, because we have to help them fix something, right? But to know that they've got a team behind them, a team that's going to help them do it. So first off, I just want to say thank you so much, everybody, for your time. I hope you plug in next time because we're going to cover part 2. But if you need anything at all, you can see my number right there. You call me, text me anytime. I'm always happy to answer those questions. All right. I hope everybody has a good voting day, and we'll see each other again real soon.
All right. Thank you. Thank you. Thank you, Miss Tamara Birch. Listen, visit her website, tamarabirch.com. Again, visit her website at tamarabirch.com. You can contact her directly, 770-916-1234. The next time we will meet is going to be on December the 2nd. Let's close out this year strong. Do not forget, the first Tuesday of every month. Put this on your calendar to join us with Miss Tamara Birch. If you are watching this as a recording, mark your calendar. You want to be here live. You can go to mortgage.lutherragsdale.com. That's mortgage.lutherragsdale.com and register for the upcoming creative financing webinar. We have this every single the first Tuesday of the month, every month. Also, visit my website, lutherragsdale.com. The corporate site is platinumrealestate.com. As always, Tamara, thank you for everything that you do for us. You are doing a fantastic job.
Have a great day, everybody.
All right, everybody. Have a great day. Have a great weekend. We will talk to everybody soon. Thank you and God bless you. Talk to you all soon. Bye bye.